it seems to me that this is a difference of opinion about how you view Wynn, whether you are negative because of its Macau presence, whereas Jim seems to. Well, I think this is like a Macau versus U.S. debate. At least it seemed to be on Twitter. Jim, why are you short Wynn?
So we do not. Our problem with the Wynn story is that value investors keep basically claiming the stock is cheap. We don't think it's cheap. This is not a call on Macau, although I think Macau is problematic. I think this is a problem, and alluding to a little bit what Josh Brown said earlier about, if you're not making money when things are really good, you've got to question the business model. But as it relates to Wynn, a simple analysis would tell us Wynn is not supposed to make money in 2022, earnings per share. It's supposed to make a couple dollars, but I think $2.50 in 2023. It made a little over $2 pre-pandemic in 2019. So at $80, this is not a cheap stock. We could argue EBITDA, we could argue definitions, we could argue forecasts, and I'm not looking for a recession to be short Wynn. But arguably, this is not a cheap stock, and that's really our case. Jim Lebenthal, what's your issue with Jim's take?
Well, it's a thoughtful position. I think you'll agree, Mr. Chanos, that the right way to measure a casino stock is enterprise value to EBITDA, and I know that you have done that. Where you and I differ is both Macau and China, because to start with, Macau and the U.S. In the U.S., you and I have had this debate on Twitter. I simply think that for your EBITDA numbers to be correct, even adjusting for corporate overhead as you want me to do, to get to those numbers for 2022, I just don't see how you do it without a recession here in the U.S. I look at last month's gross gaming revenues in Las Vegas. They were up 30%. I look at room rates for Wynn. Up 30% over 2019, over pre-pandemic. Room rates for Wynn up 24% in the fourth quarter over 2019. They're making money. Now, on the enterprise value, and I've heard you bring it up because it's the right way to look at it, $18 billion of enterprise value, $6 billion of that is the debt value of Wynn Macau. I don't think Wynn Macau is a zero. But however, let's just dance with that for a moment. If it is a zero, I've looked at the bond prospectus for the 5 5/8 coupon bonds of 2028 for Wynn Macau. It shows no sign that it goes back to the parent company. This is an independent subsidiary. I've read the 10K for Wynn Resorts. It does not in any way indicate that that debt comes back to Wynn Resorts if Wynn Macau is a zero. So, this is a fun debate, and I think you'll agree it's a fun debate because it's a complicated capital structure, a complicated set of financial statements. I'm having fun debating it with.
We look at it the same way. The net debt at Wynn Macau is about $5 billion. The net debt at Wynn parent only is about $5 billion. With the stock at 80, the enterprise value of Wynn US is about $14 billion. The value of their 72% stake in the equity of Wynn Macau, which trades publicly in Hong Kong, is $3 billion. So the U.S. operations are being valued at about $11 billion right now in the market, with the stock at 80. And even using your 700 and some million of EBITDA for the U.S. operations, it's still at 15 to 16 times that number. And that's where you and I differ. I don't think that's cheap for a U.S. land-based casino operation.
I think, as you alluded to earlier, our projections are different. And we had this on Twitter. You're at 600. I'm at 720. I think I'm low. I think I'm lowballing it. You pointed out accurately, Bloomberg's at 675. Maybe you and I should go have dinner sometime soon out at Wynn, and we'll see how easy it is to move through the hotel and the casino and the streets there. It's pretty damn packed.
That could be unfair. Mr. Chanos' picture might be on the wall there. He might be persona non grata at Wynn. You have to pick a different casino to go have that dinner.